In this market update, we're going to be talking about why price matters when you're buying a stock. Hi, Jim Gore from THOR Wealth Management. What's very important when you're investing is the price that you're paying for it, whether it's coins, whether it's stocks, whether it's automobiles, whatever it is. What really is the most important aspect of investing is the original price that you're paying. And this is a chart that I used a long time ago when I started a stock club in Marymount, right outside of Cincinnati. It was a stock tournament for the junior high. We actually had the second high school stock club with real money when my kids were in high school. And this is a chart that's looking at Abbott Labs, and this is looking at old data. So this is a really old chart. So it's looking from 85 to 1995. And over the long run, in order to make money on a stock, you need stock earnings to grow. But you can see here, it's very important what price you pay. And this is looking at one indicator, which is known as price divided by earnings, or PE ratio. And you can see here in 1991 that the PE ratio of Abbott Labs was at 32 times earnings. And if you bought it at that time, you actually lost money while earnings were going up. If you bought it in 1994, you only paid 12 times earnings for that stock. So PE, or the price that you're paying, is very, very important. You can see that gap as people were paying more and more for Abbott Labs. The earnings were going up, but the price that people were paying was higher than the earnings. Now, this is actually happening just recently in the last 10 years with the healthcare companies, once again. And this is a great example. This is looking at Bristol Myers. And you can see Bristol Myers, this is like looking at their earnings per share and the stock price. You can see here that the earnings per share over the last 10 years is up over 220%. However, the stock price has dropped 31%. So you lost money on Bristol Myers over the last 10 years because you overpaid for that stock. The PE ratio in 2015 was 27 times earnings. Because the stock has gone down and earnings have gone up, now you're paying 14 times earnings. So those that I would say in 2015, you overpaid for each of those earnings that Bristol Myers achieved. A glaring example is one that is the reason why I started up the stock club back in 1999, was because at that time Cisco was the number one largest position in the S&P 500 for 2 days. And at that time, that week, we had 5 people come to our office and say, Jim, what do you think about Cisco? And I asked them, do you know what Cisco does? And 2 of the people thought Cisco was with an S, and Cisco was the food delivery service. Well, you look at Cisco had a huge run in the stock price. And it actually went up to about $79 a share at its peak, right in 1999. And at that time, you were paying 214 times earnings for that company. At that time, the company was making 29 cents. Look at the yellow line, orange line. The earnings over the last 25 years are up tenfold. So it went from 29 cents per share to $3.07 a share. However, look at the stock price. You paid $79 for it at the peak. Right now, it's $46. You lost money on that stock price for Cisco. Right now, the PE ratio is 16 times earnings. So that's all reflection in the PE ratio. Now that you have a stock that's very similar, which is NVIDIA. And I think this chart is very, very important because this is looking at the 3 years before Cisco reached its peak from 1997 to 1999. And the last 3 years of NVIDIA. And you look at those charts, they are eerily similar. But also what's eerily similar is another indicator of value, which is price to sales. How much are you paying for each sale that they're making? Well, Cisco at that time, you're paying 38 times sales. Today, NVIDIA is 36 times sales. So looking at this, people have to understand that NVIDIA might do very well from an earnings perspective like Cisco, but because they're paying such a high premium for it, you could see NVIDIA stock not perform well for the next decade or two, just like Cisco. If you have any questions or concerns or want to reach out to us, please reach us at our website, thorwealthmanagement.com, or give us a call. Take care and look forward to talking to you in a couple weeks.